Hi, good afternoon, everyone. Hope all our audience are settled and ready to for our sharing. I would firstly like to welcome our audience here with us today. Maybe we start off with some introduction first. My name is Jasmine from PhillipCapital Partnership Department. For our department, usually we are here to provide assistance to our wealth trading rep and also our portfolio managers here in Phillip Wealth Advisory. So today we are very happy to have everyone here with us. Thank you so much for taking the time to participate in our career webinar, Rise Above the Ordinary. We have also invited a very special guest with us today. His name is Steward Thum. Steward is an experienced practitioner in planning, advisory, productivity, and also leadership. Before we get into our sharing today, maybe Stuart, would you like to unmute yourself so that you can take this time to say hi to our audience and also to introduce yourself to our audience as well?
Hi, good afternoon, everybody. I hope you can hear me. I'm Stuart here. I think I'm very happy this afternoon that I'm given this opportunity to speak. Anyway, I'm 16 years in this business, and I hope that this session, we can inspire each other with some of the experience that I have. Thanks, Jasmine. Maybe I'm just thinking, Jasmine. Since you have started, right? Okay, we have our participants who have already joined in. Why not we warm up with each other? So I introduce myself, Jasmine introduce herself, right? How about our participants here? We see how warm our guest is today. Yeah. Okay. Allow me to understand you more. All right. Who are you? Okay, who are you? So of course, these questions, and what are you going to answer me? So I give you choices. Okay, first, now if you are currently a practitioner, that means you're FA, you're a financial consultant, and of course you are exploring a change. Therefore, you log in and join us this afternoon. You give me a 1 in the chat. All right. Now, second, if you're not a practitioner, but you're exploring the path as a FA, you give me a 2, right, in the chat. Yeah. And of course, I have the third choice. That means, I just join in to support, maybe Jasmine, maybe Stewart. You give me a 3. So why not 1, 2, or 3? We see how's the response. Okay, we saw a 3. All right. So is there a 1? Is there a 2?
Thank you for your
So
support.
yeah.
We get a tree as well. Thank you so much for coming in to support this webinar today. All right, I think Stuart, most of them are just coming in to support and hear you out for this webinar.
Okay, cool.
Why don't we just continue with our sharing today?
Definitely, please, Jasmine.
Sure. Okay, so guys, we are all warm up now. So let me just start off this webinar by sharing who PhillipCapital is and also what type of services do we provide. All right, okay. So a lot of you actually might know PhillipCapital more of our stockbroking services and also for our trading platform called POEMS. But we are actually way more, way beyond just stockbroking itself. Sorry, I think it's lagging. Okay, sorry. Okay, actually 48 years ago, we began as a stockbroking firm. However, we have since evolved together with our clients to become much more than just stockbroking itself. So now we are confident to say that we are an integrated financial house with global presence. So what is an integrated financial house with global presence? So on the slide here, you can have a brief idea on the scale of our business. PhillipCapital, we have a global presence in 15 countries. Our group employs more than 5,000 people worldwide. We have offices in many different countries. Some of the countries include China, Japan, Turkey, and France. We even have a Phillip bank set up in Cambodia as well. So as Phillip client, you will be able to actually trade over more than 26 stock exchanges. Not only that, as a company, we are constantly seeking to have to have more options for our clients. This is the reason why we offer a wide selection of more than 2,000 funds and also work with 35 insurance partners. So all in all, within Phillip itself, we have about 40,000 financial products. We are able to provide a huge range of services to our clients. Hence, I'm actually proud to say that PhillipCapital is really your partner in finance. Okay, so these are actually some of the partners that we work with, the insurance partners. And then we also have a list of like, the different fund houses that we work with as well. Okay, so the benefit of being an integrated financial house with a global presence, which means that we have a network of offices all around the world. So your business is not limited to just local clients. This is a global business for you. So if you join us, like of course, as a rep, this is also a global business. You can reach out to many people from different countries. Our client can actually trade globally with us. Other than the 5 countries that I've mentioned just now, over here on the map, you can spot the rest of our other offices. So on top of that, our total AUM is more than USD 35 billion worldwide. We have a strong shareholder fund in excess of USD 1.5 billion. And as you can see over here, we also have 1 million clients worldwide. Increasing like we also have a increasing global presence of 15 countries and counting. So what's in it for you when you join us at PhillipCapital as a wealth manager? So these are the things that these things that I've mentioned, right, will cause your clients to have more confidence when they do business and entrust their assets with you. So you can actually show your clients about all these credentials that we have. Okay, and apart from our global business, of course, we also want to reach out to our local clients as well. So, in terms of Singapore, some of you might have seen our Phillip Investor Center before. We have 14 Phillip Investor Center across Singapore. A few of them are actually owned by franchises. What does franchises mean? So, franchises actually meant that our advisors and brokers can franchise our investor centers. So some of the investor center that you see out there, right, they are actually some of them are located in Westgate, Tai Seng, and Bukit Timah. So this center are actually owned. This center owned by them are actually called Phillip Investor Center Light. So those that are franchised by our advisors and our trading rep, right, they are actually called. There's a light at the back. Okay, so this will be one of the area that advisors can grow their business under the concept of network modeling. So it actually helps our consultant to have a physical presence to service their clients and to be present for their client on any time. Their own client can actually walk in, and also maybe new clients can walk in as well if they are interested to engage our services. Okay, so what are the exact services and products that Phillip offer? To categorize the products that we offer, we have 3 main groups. So transactional, advisory, and discretionary. So I will not go into detail for all the different services, but however, this slide over here actually shows the different progression between our advisor and their clients. So let's start with transactional products. So this is for new clients that maybe they just walk into the Phillip Investment Center Light. They would like to just engage like a small service. So they might still be getting to know the new advisor, and while they are still getting to know the new advisor, they have the choice to actually do their own transactions or manage their own portfolio. Even though they want to do it online, it's also possible for them. So as you begin to engage the client more, their trust level with you as an advisor and a client kind of business model, their trust level with you will begin to increase. And this is when the advisory product comes into place. So your client will be able to trust your advice on how to expand their current portfolio to achieve a more holistic planning for themselves. And over time, this discretionary advice will begin to take place. This is when your client can be able to trust you with more of their assets. Discretionary also means that they trust you so much that they are willing to let you decide on the investment that they want to make, or let you decide on the investment on their behalf. Okay, so with multiple products also comes with multiple license as well. So Phillip Wealth Advisory is one of the unique firm out there in the market that offers and house multiple license. That's why when you join Phillip, you actually have the option to choose. Candidate can join Phillip under the three main licenses, which are trading rep, financial advisory consultant, and also portfolio manager. You can see over here on the slide as well. So as a trading rep, a broker, you will be able to facilitate your clients' trading needs, which are the transactional product over at the previous slide just now that you saw. You can make margin call, you can recommend stocks to your client. So as a financial advisory consultant, you'll be able to provide holistic financial planning to advise clients on their protection needs and asset accumulation. And lastly, as a portfolio manager, you are able to manage your client's asset through discretionary services. And right now, if you are already holding one license, like what Stuart say, maybe you are a practitioner and you are looking to actually expand your services, here in Phillip, we are able to do it. So Phillip don't just hold multiple license, we are able to also equip our representative with dual license. So I'll give you a brief idea of the dual license. So there's three options as a dual licensing rep. So you are if you look at the left hand side of the slide, as a FATR, a financial advisory consultant plus a trading rep license, you are able to provide transactionary and advisory services to your client. So as a FAFM or FAPM, this will allow you to provide advisory and discretionary services. So usually our new advisors will not dive straight to get a fund management license, because it will definitely help it definitely will help you to scale up your business in the long run, but of course you have to build your trust level with your client first. So the last one is actually more for the existing practitioner, existing remisier. So if they are interested to explore the fund management license, we have FME XTR. So main license will be fund management, but you are still able to service and onboard trading clients. Our systems and process will be able to support this as well. So dual license not only benefit our clients. As rep, we also have more advantages because it can lead to multiple source of income. So for trading rep, your income can be active and recurring. So for active, right, when you're sleeping at night, you still earn income when your client trade online themselves. So for advisory, first year income is considered active, as you need to meet your clients either online or offline. However, income from second year onwards, you will be both passive and recurring. So it will be the same. It will be the same for discretionary service. To give you a better idea of the income, so just let me show you the graph over here. This is an average income of the top 5% rep in the PhillipCapital. So you can see over here the figure shows you the first two rows actually shows you the single license representative, and the last row shows the dual license rep. So it's significant that throughout the years that holding dual license actually helps our rep to achieve higher income stream. So this is the background and services in place for our rep. So I will actually, this is the end of my sharing. I will actually pass the time for Stuart to, share on his part. Yeah. Okay, go ahead, Stuart.
Yeah, thanks, Jasmine. Let me share my screen. Okay, I believe you can see. Wait. Okay, well, I think I just start my sessions, all right, with the with some introduction. Okay, I introduce this. Okay, along the way, my slides, I will have these QR codes, right? So talk to me. So talk to me is you talk to me is you tell me, I talk to you, right? So this is your command, right? Talk to me. So because maybe along the way, you have something that you got to go attend to. But maybe at some of the slides or some of the segments that you find interesting, that you want to meet me, that you want to talk to me, right? So you just scan the QR code, you leave me your contacts, the details, then I hope to communicate with you, right? And of course, I think this session is a webinar, right? So webinar means actually all the way from me, right? So you don't have a chance to speak. So I understand that, and I hope that we also have these opportunities that we can communicate better, right? Because all is my view, but hey, what about your view? Maybe you have a better perspective, you have a better views. I hope that I think more than just these sessions, we are able to communicate, we are able to exchange values after this. Now let me start this so-called presentation. All right. Now, have you ever wondered in life, why are some people doing this and some people doing this? Why are some people like this and why are some people like that? Right, let's have some engagement. Okay, you follow me? Why some people relationships or marriage are like that and maybe some are like that? And why some people work in such environments and there are people who work in this style environments? Have you ever wondered? Right, if you think you have spare fingers, right, you can participate in the chat. So I think it can be more two ways. Now, what do you think is the root control factor to all your incomes, or rather all your outcomes in life? What do you think? Let's see if there is people who are willing to participate. Right, if not, then we won't so-called waste too much time. Right. Okay, I think let me see. It's all boiled down to choices, right? So from the first context that I share with you to the second, to the third, to the fourth, it's all about choices. So therefore, today we want to talk about these thing, choices, these choices. Well, just now we have some so-called we try to get some feedback. How is the audiences like? Of course, today we are doing what we call recruitment talk, right? So in fact, we are doing at this timing. So we chose this timing. I guess those who have joined, you are serious to find out something from us or find out something from these sessions. And then, in fact, I also make my choice, right? So in fact, I categorize a few types, right? So of course, for the practitioners, example, right? So the first type, number one, the new and the aspiring. Join for just join or to 2 years. Maybe you have 0 to 50 clients. Now the second type, more than 2 years already, you have more than 50 clients. Third type, veteran, more than 10 years already, and you have more than 200 clients, right? So these are just some what we call categorization that I make. Or maybe you have your standards, you have your benchmark, but I just do this. Now, maybe for the first category, in this practice, maybe these are the things that you'll be looking at. For example, lead generation, opening presentation, and of course, you need some business discipline and systems so that how to make yourself sustainable in the business. Now, second group, you start to ponder about how there can be repeat business from the existing clients. They come back to you and then they want something else. And you start to ponder what is referrals and how do you scale the business. And of course, the third one, I think you know it better. All right. So I'm not going to talk about this, the third one. And today I will say my choices more into the second group, but I believe the topic that I'm going to touch on, it applies to all these three groups. So of course, I choose two main things to talk about, right? Two main things. But before I talk about what is that, right? So I just have a background first. Now, for sales mastery process, especially in this business, I think there are 4: lead generation, conversion, case size, and repeat business. So first thing, you will probably ponder, well, will you start with your inner circle, your personal network? Some people call it warm leads or warm contacts, warm market, right? Now, second type, what about the untapped market? Some people call cold market, whatever you call it. And then how are you going to reach them? Social media, traditional media, which I think Phillip is pretty strong at. All right, if you need radio, TVs, newspaper, you name it, in fact, we have it. And of course, road shows. So how are you going to do this? Which I think the first part of the process, which you got to look into this. Now, second, conversion. So now people come and engage. How am I going to convert them? So five things that I thought is important. Things like image. How do we dress, right? How do we present ourselves? Of course, second is presentation. These are like what are we going to present to them in terms of our services, of our expertise. Of course, technical know-how, soft skills, and I think the last one, pretty important, follow-up. And third part, case size. How big is the case? Which I boils down to comprehensive financial plan. And of course, products and solutioning, which I think Jasmine just touched on just now. I really think Phillip is really the partner. Anything to do with finance under the sun, in fact, I think we do have it, right? And of course, third is that how do I raise my case size? What type of clientele that I'm going to move to? So I think these are the things that we'll be looking into. And last, repeat business, which is how do I retain the clients? Do I just get a one-time client and just put it there? Or how do I have them to come back with more business? And of course, how do we engage the client? So I just give you a background. Now, coming back to the context, today I want to talk about these two. How do you scale a business through these two things, insightful financial planning and referrals, right? So I think we have a lot of things to talk about today. I don't want to talk about some motivational things, what mindset thing, but I think it's more a little bit into technical know-how that maybe for those who have just joined, you need some motivation. But I think after a while, in fact, you have maybe listened enough already. Of course, what are the things that probably you can learn, you can look into to really scale your business, right? Increase your case size and things like that. All right. Now, hard sell to hard sell. So let me ask you these questions. Okay. Usually I want to pause a bit is whether you're following. Usually I use a chat. Right. Do you mind? Like, oh yes, I'm following. I give you a question. Now, what outcome do you expect from a car salesman? Let's say you want to buy a car. You go to a car salesman. What do you expect from a car salesman? Do you think you will, give me an answer in the chat? Yeah, anything. I wait for about 5 seconds. Right, 5 seconds. Do you think you will support me by? Yeah, thank you very much. Okay, discount. Okay, discount. Now whatever you call it, discount, good service. Okay, at the end of the day, is you expect a car, right, from a car salesman, correct? No? Or say, hey, 这个不是废话吗? Oh no. Later will lead to my point. Okay, now what do you expect from a property salesman? Then I think you should know my answer. Okay, property. Correct. That means you bring you for all the viewing, give you all the insights, technical research, blah blah blah. All this actually, we come back to this thing, property. All right. Now come back to our practice. What outcome do you expect from a financial planner? If you think you have free hands, yeah, give us some answer. All right, give us an answer. I think it's called, of course, financial planner means financial plan. Correct, no? Right? So you expect a financial plan from a financial planner. But most often, people are getting maybe just the insurance summary. And in fact, a lot of people think that this is a financial plan already. All right. So I think up till here, I hope to dive a little bit. All right. Is that in fact, this practice, there are a lot of practitioners and there are many ways to practice it. Like I shared, there are 4 segments of this whole process. And I want to touch a little bit on this point, this topic. All right. And before I go into this, right, people always ask how to get more business, how to get more profits. So in fact, why not ask yourself, right, in whatever you do, right? Today, if you are a practitioner in the financial services industry or whatever you're doing now, right? How would the world be a better place because of what you can offer, right? If you're a doctor, everyone knows you want to make more money, right? And if I'm a doctor, if I'm a lawyer, if anything that I do, right, how can the world be a better place? So sounds big, but this is not about sounding big, but it's about okay, can my contribution, the little things that I do, make this place a better world? So I think that's where I'm coming from. So I think with that, I touch about this thing, insightful financial planning. Now, all my clients, if I'm to dive into it, right? So in fact, all the whole process, we call it fact find, right? So for fact find, we gathered all the information, right? So in my 16 years of practice, all my clients, I would say 95%, I know all their information. Of course, exactly to the sense, maybe not, but I know enough information so that I can give them a fair planning and therefore a fair recommendations. Now, I bring out a few things which I find it useful for me, my practice, and I find it very useful for the clients. And in fact, there are really a lot of things for me to discuss with the clients. So first is what I call the balance sheet. Now I change all these terms into like, if I see a person as a company, right? So when I research stocks, whether to buy or not, I look into their balance sheet, their cash flow statements, right? Basically their financial statements. So if I look at a personal finances as same as a company finances or financial statements, so this is how I look at it. So these are the few things that I look at, right? First is how much asset this person have, how much liability. Of course, these are normal, right? Now, second is I will split into it like, okay, what are the net investable assets? And then what is the net worth? Also, what's the difference? So the main difference usually comes when people buy a home. So because I take home as a income generating assets. And usually people buy a home. After they buy a home, of course, they put in a lot of down payment. I'll still consider that as part of the net worth, because happen that if the person sell the home and then of course you still get the money, right? But in fact, usually after people buy a home, they don't have much investable assets. So these are the point that I'll probably start to discuss with the clients already. Now then I'll look at CPF and cash, right? So you look at it, okay, this is when, why do I split it? Because somehow CPF, you don't have the liquidity, right? You're really following the regulations when you're going to take the money and all this. But if you really want to really plan well with more liquidity, how much cash do we have? All right. And then of course, how much liquid assets do we have? Right. So these are again a lot of indications that some people really just all into properties. And then what will happen like recently, when the interest rate raised so high that a lot of people may not be able to or rather at least they could feel suffocated if they have too many properties, and especially those who are on loan. And these are some of the assets or rather financial ratios that I look at it. Debt to assets ratio, solvency ratio. So when I present and when I can discuss all these things with the clients, in fact, client really start to open up, and I think I start to differentiate myself. Now, next, cash flow statement. So I don't want to, just bog you down with a lot of all these details, right? I just, bring through it. Like, for example, okay, these are cash flow. That means your income. Okay, these are the income, like how much made up of CPF, how much cash. So just now was balance sheet. That means how much you have accumulated. These are like every year, how much will you get, right? And then I look at, in fact, what is your monthly income, and how, in terms of your liquid assets, how long can it sustain? All right. And then of course I look at all these ratio, like for example, the first one, savings ratio, savings to income ratio. And then you see, why cash savings to income ratio? Because a lot of people sometimes is that CPF, no choice, right? They say, but cash very little. So let's say this number is, cash savings to income ratio is very low, but a lot actually goes into the CPF. In fact, there are things that we got to look into. So these are the things that I thought after the fact find, it is a very, very fruitful discussion that I have with the clients. And of course, for a topic like this, retirement planning, right? So I'll also do a projections, right? So if your current assets and your projected funding until the desired age that you have, and then how much will you have by then? And then after that, if you deplete the fund based on the RI that you have, so on and so forth, then how long can you use this due? So these are the projections, and that's why I say more insightful type of financial planning that I will go through with the clients. And this is interesting. Well, I mean, we are financial planners, but a lot of time, a lot of, or rather majority of the assets of the clients, in fact, they are buying their properties, their home, right? So these are the things that I will analyze with the clients, or of course with the help, like a lot of website, the property gurus, all this, they do have it. So I think this is the first part that, okay, now with this income, how much loan can you get, or at least then what is the value of the property that you actually can buy into? But I think the second part could be very interesting, right? Because for example, a lot of people would think that, yeah, buying property is a no-brainer, maybe, right? It's sure make money, things like that. So is there things that we should need to look into? For example, let's say interest paid, right? A lot of people are not buying the property with full cash, and therefore they buy with loans. Now, when loans is concerned, there's this thing called interest rate. So sometimes when people sell their properties and then they actually, after they deduct the interest, in fact, they are making a gain. After they deduct the interest, they may be not that, fantastic. They may have yet to look into. All right. Second thing is things like maintenance fees. So if we are to factor in all these costs, for example, in this case, so in fact, if the person is buying this property at 1.5 million, so that's where, I give them the indication that, roughly, you're going to set 2.28, then you break even. Then, of course, the indication is that, should I, or rather things like, am I buying it at a high, or am I, or rather, what are the price that I should be consider selling if I want to sell it at a gain? So these are the insights that I would discuss with the clients. And of course, things like asset allocation, right? We talk about, different asset class. In fact, we talk about the ROIs, what is the exact ROIs that they are getting, and then we, with just simple one page, actually we to the clients, we can really analyze their whole portfolios, and we can make the proper recommendations. Now, maybe I just, pause a little bit here as well. I go through with you a few case studies. So just now is what I feel is have been helpful in my career. All right. So that means clients are engaged. So they are interested to find out, okay, well, what can I do with you? Financial planning, what is it all about? And even for clients who just want to come in and buy a product from me, I'll still do the whole thing for them, which I find that after I know all these things, of course, with their permission to, review me as much information that they can, I can really do a better recommendation with all this information. I share with you 2 case studies, which I feel good about it, right? Now, first, there's this client came to me, all right? So this client has got promoted and he expects a pay increment, and therefore he wants to upgrade his home. So he stay in a HDB. And the clients do not want the home upgrade to affect all his other goals. For example, children education. So he got 3 kids, retirement funding that he has set aside, things like that. So yes, he knows that he got pay increment and he want to upgrade a home, and then what? How much? Right? What are the risks that he may face? And of course, we did analysis. We concluded this is the thing that now, after I calculate all the goals they have, and then in fact how much the client should put in, and what are the assets that the client have, and things like that. So he concluded, try not to buy a property of more than 2.2 million. And of course, I mean this during the analysis time, okay, the interest rate is still at the low lah. All right. So of course the client actually they are more lah. So okay, clients want to buy a landed, right? So with this analysis, in fact, clients has a more informed decision, more clarity before he went to engage a property agent to do his shopping. So end up, client actually buy 1.5 million condos instead of landed, because 2.2, I mean, again, he wanted a freehold, right? So where can we get? So probably get a MacPherson, so he finds small, but anyway, buy 1.5, and in fact, today's when interest rate just jump like that, clients are not affected in terms of their finances. Now, second case study, I also want to share with you this. Okay, this client is very unhappy at work, right? So this is very different because he's old already, right? But he's worried that he may not have enough to quit the job. So we did analysis, right? So and okay, just tell me the project till age 80. I think when we did this, he was age 50, right? Age I think 50 or 55. And because of the change of management, and then the management didn't really respect him as someone who has started as a pioneer in the company. So he's very sad and he's very unhappy. Yeah. So he wanted to quit, but he just worried. And of course, over the years, as we plan, I always tell him that actually you can just quit the job. You can just quit the job. But he's just worried. But after I did all this analysis with charts, right? So this is where, of course, on, I think your left, right? Your left. So with current living expenses. So you look at the blue and then you look at the red colors, all right? So the red colors is the expense, the blue is the income. And then the below bar charts is actually all the assets that the client has. And of course, on your right, and then if we make a recommendations, we change a certain asset class, we reallocate it and things like that, and then how the finances will change. And in fact, if we project it and we calculate it, I mean, even we take into considerations, the change of, the medical insurance premiums at that point in time. And then, in fact, this client I just assure him that you can quit your boss. Right. So I think sharing with you these two case studies, more than just the numbers, there are a lot of satisfactions that of course I get, and of course the type of relationship that I harness with the clients. So for the first case, very young, very aspiring, and still moving up the ladder in his career, right? But at the same time, he's also very prudent, right? So don't want to make things worse just because the income has made doubled and things like that. The second case is okay, is to retire already, but somehow when people are really reach that retirement age, right? So he will really get worried, right? True enough, I think for the second case, right? For the first case, so I would say the clients avoided things like very high interest rate, right? So second case is the client quit the job, and he's still taking on part-time. And the emotions, the feeling that he has in doing some of these part-time jobs, sometimes as a consultant to the same industry, and sometimes he go, do some, helping his friend businesses and all this. The good thing is when he's not happy or feel very tired at work, he just quit the job. He just quit the job, right? So I think that's what we're trying to, reach, right? So for retirement is concerned, right? So I think sharing with you this insightful financial planning, what I try to achieve with the clients is organize. Organize will help me to reach this thing called clarity. Okay, at least I know what is it ahead. Yes, we can't see every details, right? Because things are dynamics, things are changing. At least once I organize, okay, then I can move on to how can I strategize. And of course, last thing I say is personalized, because really every people has got different goals and objectives, different financial situations, right? It's not that, oh, everyone must have 1 million or 2 million to retire, but different people have different lifestyle and things like that. So that's what I feel, right? Going through the whole proper, insightful financial planning, and that actually help the clients to really achieve this thing, very organized, and then strategic clarity. And in fact, they are making decisions with very, very, very informed informations. Now, to support that, I think there are these three things: solutioning, wide products range, and multi-licenses. Well, I mean, again, this is from me, right? So if I'm a person who, I'm a tech engineer turned into FAs. So I like to compare products. I like to know the best deal that I can get. In fact, with more products, more different type of products, more comparison, it will come up with solutions. And with more and more solutions, then it helps to make me having a more informed decisions. So I share with you some of these things. For example, I think in Phillips, I'm very thankful because we have this department that, they just compare, all the insurances. So this is what I did many, many years ago, not with Phillips yet. So I will look at things like IRR, who will give me the best returns. So this is what I'll be going through, because if I ask myself, I am the client, which one will I get, right? So this is what I will do, right? I will look at client finances. It's like, okay, if this is my finances, what would I do? And therefore I do these things. And this is to compare, okay, just to show it to you last time. Okay, if I'm to do a comparison in terms of what we call mortgage insurance, I got to compare a single, a joint, male, female, decreasing term, level term, blah, 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 all these things. And in fact, I think it's pretty tedious. That was then when I think I'm going to do like things like synopsis. So these are the work that I thought I've been putting in. Yeah, sometimes you find it a little bit too much, all right? But of course, when you can help more people, and I find it very satisfying. And of course, just to share a little bit more about myself, right? So just now was that, okay, I will go to extend to look at client finances and understanding, uh, how they want to, invest the money, manage the money and things like that. And at the same time, these are what I do. So I put here like what to avoid. So basically I'm trying to tell you, in fact, a lot of times I think I'm pretty bold, right? So over the years, if you remember, there's this thing called mini bond, right? These Lehman Brothers mini bonds. So that time the bank's selling like hotcakes. I was the one, of course, people are doing the marketing, people come to us and, wanted to buy, right? So of course I say no. And it turned out to be a mega bond. So one of the big things that happened then in 2008. So you say, oh, what makes you so sure? Of course, if you look at the inflation in US, the property inflation, right? And of course, the loans then and all these things, in fact, things are going to happen. I don't think people are not sure, but just that somehow, during that time, the mini, I think I left one eye, the mini bond, in fact, it was pitched like a fixed D. High yield, top until like almost guaranteed. So, but is there risk? So to me is, for those that bought in fact, hope that they can get their capital back with the high returns that they can get. But if you ask me, I won't put my money in. So that is what we call risk. Second, if you heard about this thing called Geneva Gold, things like, of course, every month they're paying you 2%, right? Guaranteed, every month pay you 2%. I think it is too good to be true. So I always say, if you look at Warren Buffett, his annual returns is about 25% after so many years. And if I can give you, more than that, maybe you need to think twice. Second thing that I always say, if you look at the banks, what are the products that they have? In fact, they are charging the most interest, credit cards, right? So it's also about 2% a month, right? And in fact, they are taking huge risks for unsecured loan. So I always think like that. If I'm smarter than a bank and I can generate that returns in the long term, I better think twice, because I don't think I'm smarter than all these elites. So these are the things that I went through. Of course, when I say this, is I hold talks, I reach out to the clients, and if you can tell your friends, don't do it. I also talk about Ponzi schemes, right? So how all these people make the superstars, and then how layers by layers, in fact, luring people with very high returns, and then of course using the money that they gathered for this layer to pay the previous batch. And then hopefully, in fact, I was talking to a group of SMEs owners, and these people somehow they sold their business, they closed some of the restaurants, they got the money, and sometimes support friends, things like that. They went into all these things, and after that, oh, quite a waste. So these are the things that I did. And of course, I also spoke about ILPs, right? So ILPs, they are eras, right? So when ILPs is, I find it pretty high charges. A lot of all these things. So I think I'm pretty bold to, tell people, no, I'm not gonna do this. Things like that. So this is what I feel, that if all these things I'm able to avoid, and you give me enough time, when I avoid the risk, I help the clients to avoid losing their capitals. They have a lot of opportunities to make decent gains in the futures. Now, talking about investments, right? Let's now talk about plannings. So I think part of the things about plannings, besides delivering financial plans, is also really about financial or rather investment gains lah. These are my experience, okay? And of course, okay, this one not yet, okay? So I talk so much already, so we take a break. So usually I take a break, ask you some questions. So these are histories, real one. So you see, point A, point B, point C, point D. Now retrospect, you really know what will happen. And then retrospect, today, which point will you buy? A, B, or C? So if you think you got spare hands, spare fingers, will you participate? This one not so sophisticated, right? So when do you think is the best time to buy? A, B, C, or D? A, B, C, or D? A, you type A, B, you type B, C, you type C, D, you type D, so that I can make sure that you are following. All right, thanks for all the response. All right, yes, I think C, right? I mean, this is no brainer. Of course, I mean, like I said, we are looking back already. C. Now I show you some interesting facts. I call it interesting. Now I put in this. This is the sales figures of the financial institutions. Okay, so the chart behind, just now you say C, right? C is actually probably at the lowest, 209. You look at the sales, in fact, is the lowest. Sales of what? Basically, sales of unit trust, okay, by a financial institution. So let's name all these names. Now, where I'm coming from? For consumers, for investors, I mean, we don't talk about those that avid investors that can do pretty well themselves. Do you look for advisor? Actually, you need that advisor to handhold you, or maybe to encourage, motivate you to invest more when the market is low. And in fact, when the market is high, hopefully this person can anticipate and he can already get out of the market. Then, of course, the next question comes. We don't know. We won't know when is the highest, when is the lowest. So we don't need to know when's the highest, when's the lowest. But I think with enough research and anticipation, we do know where the market is. All right. So I share with you some of the investment calls that we need, that we need. So all these calls of course, there are many calls, but all these calls I put it out, it's just that basically we managed to avoid all these big crises. Okay, so I think first one is in 2007, where the market started to crash, right? So that time was basically everything is bullish. So in fact, I joined this business in August 2007, right? All the clients just came to me, I don't need to sell, right? They just want to invest. Half an hour, they want, but of course that time, we pulled in 50% in bonds, which was pretty stupid because you can't perform compared to if they buy stock themselves, if they buy somewhere. All right. And then, of course, why I pull this out is because when we make the call, if you look at it from the peak to the bottom, it really takes a while. Sometimes you may anticipate something, but the things may not just happen. You got to wait. All right. While we wait, and then, of course, the stock market will just move up, and then the client will blame you, something like that. So, but whatever it is, okay, things plunge. The second thing is Europe crisis. If you do remember, right? So I think during that, I mean, after the global financial crisis, I think it's about 2010 where the Europe crisis happens. So before that, we actually get out. All right. And of course, even in 2020, these are COVID. So you say, oh, you also know COVID happened. No, of course not. But I will say, even if COVID doesn't come, the market is about time to, calm down. So you say, oh, what makes you so sure? We cannot say very sure, but there are certain things that if you look enough into the macroeconomy, I think we should know how to deploy it. So true enough, I think when the COVID happens, right, the market just plunged like that. And what's a good thing that if we are managed to lock into bonds and cash, basically clients has a lot of opportunity funds. All right. So when I have a lot of opportunity funds, that means I can reap the opportunities. That means I don't need to lose my opportunity cost. If I buy in a high and I wait and wait and wait and wait and wait, and investing is long term, yes, long enough, but a lot of people invest 10 years, 15 years, still don't make money. All right, is that long enough? I think there are opportunity costs, and therefore I think there are a lot of things that we need to look into. Now, of course, I think last year, recently, right? So that's when the Fed, just increase the interest rate, actually increase the interest rate. We stay out of the market. So I think these are some of the things that I wish to share a little bit more about myself, right? Not to share with you that I'm good. Of course, I mean, you see all these things are like success story. We managed to avoid. These are the big crises. Do we make wrong investment call? Of course there is, but at least it doesn't affect the big portfolios. All right. So I think we simply put, I will say, this is my belief. This is my value. I want to give my best. Or give my best doesn't mean most accurate, perfect. My best, I do the comparison, I do the research, whatever knowledge that I have, I hope to make a better decisions, right, when I advise the client. Well, so far, so good. So now, just now we talk about insightful financial planning, right? So, and then I share with you who am I. Okay, now I talk about the second thing. So let me check the time. Wow, it's a little bit long already. So thanks for sharing, staying with me still. Now, I think this should be fast. I talk about referrals. So I mean, if you are considering joining the practice or you are already in the practice, of course, if you're already doing like what I shared, I mean, in fact, much better, then I wish to encourage you to continue with this practice. All right. Second thing is referrals. Maybe you're already there. Then again, scan the QR code. I also wish to talk to you and learn more from you. And maybe if you're not doing that, you are exploring how to do that. Yeah, maybe you can also contact me, and then we can 交流，huh? Okay, so I talk about these referrals. Now I think referral is a system. Okay. Now there's a difference between referral and word of mouth. That means you do well or somehow your clients like you, and then he refer the friends, and you wait like that is very passive. Why I say the system, you got to know how to reach out to them, right? Most people will not auto one, not auto. They will not auto. Most people, there will be a rare group of people auto, right? And then this group of people usually join SFA already. Okay, but okay, not true lah. I mean, they are still, I call it center of influence. Later I'll go through you. Okay, so how do we have a system and how do we catalyze people to refer friends to you? And of course, the background is you have done a professional job, a good service to your clients. If not, why would people refer friends to you? There's no such thing on. All right. Now, second, I think it's cost efficient. Later I show you, right? Instead of you go and buy leads, you can do a lot of this thing and you spend a lot. I think it's very cost efficient. And referrals is not about getting the names and the numbers from your friends, but it actually starts from the very first meeting with your clients. So I just give you some pointers, right? Now I share with you these referral trees. So I like to track my clienteles. But of course, I mean, this I stopped. I think this is in 2020. I pulled out the numbers. Okay, so obviously these are the clients. So the first one is my direct contact. My direct contact. Then the second layer is where the friend he referred, and then after that their friend referred. So I call it referral tree. All right. So now you see, I call this center of influence. That means this guy really is my marketing manager, refer me one. And first tier only, I think there's about 10 already. And if I calculate back then, I mean, continue to calculate, all right, the whole thing is 54 clients. Of course, a lot of these people are in the maybe below one. This first one don't even know that. I think there's a power of referrals. So I say cost efficient is that how much do I need to spend? Right. So I won't say it's cheap, I won't say it's free. I won't say that. Why? Because I really got to harness this relationship. With my COI, every year I meet them 2 times. I buy them good food. Of course, always believe in that. People don't refer you because you buy them good food, as if they got no money to eat, is it? No. Of course, I think it's through food, through meals, right? We can chat more. And these are the COIs, in fact, they'll talk to me about my business. Earlier part in my business, when I was a Lone Ranger, they will question me, say, I refer friends to you, and how do you make sure that you can serve more and more? Do you have a PA? Are you going to expand? And I garnered, all these challenge from them. I think they want me to be good, right? So second, I show you this as well. Same thing. And you see 17 from this person. So I'm showing you a few. Okay. Now, this one, I think I hope to encourage. You see, my direct contact, this person is not a COI, right? But somehow he referred this guy to me, Josh. And this Josh become my COI. All right. So 22. And this 22, of course, I actually didn't go and calculate how much business I can garner from here. But where I'm coming from, I show you these 3Ks. It's close to 100 clients already. Of course, this is not like overnight, it's not even 1 year. This is over a few years. And of course, I won't want to boast to you that, in fact, I've got hundreds of COIs. No, right? Actually, COI is not a lot, but you just need a few. And you just need to really focus and, harness this relationship with them, more than just a personal relationship. In fact, the professional relationship we got to harness, and then they see, in fact, they will really, they want to support us. They want to see how in their capabilities, they want to prosper us actually. So I think more than just making money, more than just having more deals and businesses, and the personal relationship and dissatisfaction is what I think it keep me a while or long enough in this business. Yeah. So I think to embark onto this journey, that means the journey of referral. So first is referral mindset, right? So second, how to build this business. And then the script and what the structures to ask. And then what to prepare before, during, and after. So I think these two topics that I spoke about, it helps me along in my career. And it works for me. There are many other things. For example, if you're still at the lead generation part, how do you use social medias, right? Which one will you choose? Instagram, LinkedIn, this one, let's don't talk about this. I mean, I have limited time. I talk about these two. But before I close off, same to just now the questions, in wherever you are, how the world can be better off. So I share with you all these referral trees. Yeah, seems good, sounds cool. But I think these questions we also got to ask ourselves. So why would your clients refer friends to you? Because you're handsome, maybe, or pretty, or there must be something, the X factors that they refer. And these are relationship. And I always advise that let's don't abuse relationship. What does that mean? Many a times people just refer or just deal with us. But along the way, they will see these things. That means what are the real values in terms of your professionals can deliver to them. After a while, they don't see, they will leave. Right? So these are the things. Now, I touch on this too, the insightful plannings and referral. I think these are the things that walk me along. I touch on this again. This person called Bian Que. Who is he? So he's a physician. So I'll talk about a little bit of stories. Let me see. I think there's some chat. So let me break a bit. Okay, cool. So this Bian Que, this physician was asked by the emperor. That means to meet the emperor. So when he meet the emperor said, okay, well, I heard that you're very, very well known. I mean, this is in history. So in fact, there are people who everyone think is died already. So he treated, and then that person actually came alive, right? So that's how he became famous. And then this emperor said, oh, wow, glad to know you. But this Bian Que just said this. He said, I think I am not that great, right? Just me. I mean, I think because him, this Bian Que, I am treating critical illness. When people the illness went to critical stage, then I treat them. In fact, I don't think I can ever treat them. I merely help them to extend their life. I think my second brother is better. Why? Because he focused on treating chronic illness. That means before the illness goes into the critical stage, my second brother will tackle it. I think that's a better position. And I think my eldest brother is the greatest because he does prevention. That means something wrong, maybe sneeze, maybe cough a little bit. Oh, so you got to attend to it. How to eat better, how to live better, how to sleep better, and so that you don't even develop into a chronic illness. Now, I share these stories many times because I think this is how I view the business. I think we are in the business of education. Somehow people won't wake up in the morning and say, oh, I want to invest more. Okay, maybe because of greed, but I want to, plan my finances, or I want to buy more insurance. Usually people won't. And in fact, you need some motivations. And I think there are a lot of prevention jobs we need to be doing in clients' life. And I find comprehensive financial plannings can achieve that. And in fact, if today a lot of these informations on the internet, I think comparison helps me. And of course, then it leads to this thing called referrals. When people see the difference, they start to refer. So I think last thing, self-confidence. Okay. So because I think in my introduction of the the EDM that you see, I touched about this lah. So what self-confidence is that I think this is how I built my business upon from zero till today. And of course, I think it's the same thing, right, to the clients. Now, in an aeroplane, there are always two engines, correct? Always two engines. So maybe before I go on, so can you imagine if you were told, let's say you want to fly to London and let's say the flight ticket is 2,000, but then the airline say, okay, now the ticket is only $800. Oh, why? Because the plane only have one engine, right? Usually the plane fly two engines, but now it's only one engine, but only $800. Will you fly? Will you buy? Most people will not, but let me tell you, most of the time the engine won't fail. But why is it so? Because you don't know, it's fine, but after you know, you become very insecure. But I always remind the clients, in fact, with the advisors, is the same thing. Now, there are always two types of income that we talk about. First is active income. So now I'm talking in the context of FAs. So of course, I will focus my business in financial advisory business. Of course, these are the things that we're talking about. I think Jasmine just touched on that. We have just a lot of things that we probably can do and look into, when especially we do about comprehensive plannings. So clients just need things from different aspect, and these are the income that we can get. But at the same time, what about passive? Now, passive, I don't mean like you don't need to do things, but maybe your focus span is not that great. Simply put, some of the businesses that you invest and some of the assets that you build, right? So as a financial planner or advisor, I think this is about authenticity. Why I say self-confident just now is that, of course, when I first started, I consider myself as very poor, right? So I need business. I was desperate. Well, I still got to do my professional jobs, right? But along the way, I think I got to build my second engine. I'll start to invest what I pitch to the client. And then along the way, my passive income build up, my active income also build up. Why? Because the skills, experience will not take it away. You know very easily that you can build that income. So when my two engines is running, in fact, I'm not that desperate. In fact, clients start to respect. In fact, actually clients coming from all walks of life, I can choose already. So I think that's the self-confidence that I thought I can have. And in fact, I just feel that as a planner, the more self-sufficient we are, the better recommendations we can make instead of just looking at some of the, the monetary rewards. Okay, so I think this one I just want to touch on. Well, I will not talk about this. Okay, this one, my last part already. All right, come back from the start till now, the power of choice, right? So we talk about choice, your choice, your choice. Now, of course, we are talking about some, here we are talking about recruitments. So I just give you illustrations, right? So now, of course, some people will think, should I not consider joining? Should I not, right? So now, wherever you are, right? So my encouragement is this. Now, invest 1 year of your hard work and humility. Just now I talk about all these things, it just don't come overnight. In fact, if I tell you I has got 200 clients, believe me, probably I will have 2,000 rejections. People will say no to me, something like that. All right. So just that somehow, because I got these 200 clients, it cover up all my disappointments. Right. So where I'm coming from now, go back to the where you are. If you are looking into changes, you are looking at exploring, things like that. Invest 1 year, hard work and humility. That means, okay, maybe this one I know, that one I know, everything also know. Why not you ask yourself, have you mastered it? Right? I think all the things that I talk about, maybe you won't don't know lah. You should know somehow, right? How do you do it? How do you master it? All right. Even the theory is like that. You have your way to do it. All right. And with that, if you succeed, let's assume you're 30 years old this year, you are gonna just work until 60 years old. 1 year, 29 years of joy and prosperity. Now, then what if, okay, you choose not, not what? That means you choose to be lazy, arrogant, stubborn, Okay, what will you do then? After 1 year, congratulations, fail. Same lay, doesn't work lay. My business don't scale lay. What will you do? I think you will just go back to, where you were lah. Right? Now my question is there a huge difference between 29 years and 30 years? That means you invest 1 year and you don't invest that 1 year. I think not much of a difference. That's the last thing that I hope to encourage, that you take the steps, again, you make the choice. Right? So, okay, still got a story, right? Now, you see, I just close this the flea in a jar. So I like this story because it's an experiment made. So the scientists put all the fleas in a jar and then they put a lid on it for 3 days. Okay, so the lid will jump, the flea will jump up, right? So in fact, they jump, they hit the lid, they hit the lid, they hit the lid. After that, after 3 days, the scientists open up the lid. The flea will never jump off the jar. Why? Because their past experience told them that, okay, I just need to jump that high. If I jump higher, I'll get hit, I'll feel the pain. Okay, I don't know whether I feel the pain or not, I'm not a flea, but somehow it speaks something like that. Now, how it relates to us, I think it's really about, we are made up of past experience. So whatever past experience we have, all right, we may take the attempt, we make the attempt, and there's inertia. So this story just encourage us that, of course, if I'm looking into a change, breakthroughs, probably this story will remind me that, yeah, maybe I'm like a flea. Maybe I have hit the lid for many times already. All right. Maybe this time round, I should just jump higher. So I think with that, all right, I just end with this slide again. Now, if you think you are interested to talk to me, you want me to talk to you, just scan this, and then I really wish to talk to you. Thankful that you are staying all the way with us, and then you listen all the way, one way you listen to me. I believe you have a lot of things to talk to me, so you just scan this, and then you just I wish to meet up with you. Thank you very much. I pass the time back to Jasmine.
Yes, well, thank you so much for your sharing, insightful sharing, Stuart. I hope that many of you have something to take away from today's sharing. And if you have any burning question like what Stuart say, that feel free to connect with us. So there's a QR code over here on the screen. I'll leave it on for a while, and then you can always connect to Stuart or I or myself to actually if you have any other questions. So and also, if you enjoy webinars like this, I'd like to invite you to follow our social page so that you'll be updated on any upcoming webinars. So thank you so much for staying through, and thank you for joining us this afternoon. And we will see each other soon again. Thank
Thank you very
you.
much.